Oliver, the big news today in Barclays land was that cornerstone investor Qatar Holdings sold down its shares via its warrants, about 300 million's worth. And I guess it doesn't really matter that they sold down per se, because they still are a very big shareholder. I guess it affords us an interesting opportunity to say, is it a good time to sell, or is it still a good time to own Barclays? It's also an interesting thing from a timing point of view, because Barclays' new CEO is coming out with a big new strategy presentation in February. Put those things together, do you think it was a good thing to sell down now or not?
Well, they're certainly sitting on a big profit compared to where they were just earlier in the summer, around about the time when all the LIBOR scandal burst out. The shares took a very heavy hit. Then the management was replaced, Bob Diamond left, Marcus Agers left. The shares have bounced back very strongly since then. So anyone who was fortunate enough to buy in at the bottom, or prescient enough to buy in at the bottom, is sitting on quite a healthy profit regarding where it was in the summer. And some of that, I think, is hope built into the strategy presentation. There's a lot of talk going around about what they might do. So perhaps the right thing is to take profits now. And
the big question, of course, is what will this new retail guy do about the mighty investment bank? And some people are advocating for a radical solution. Some people think it should be shrunk down to just the core businesses that they're very good at. Others worry about the ring fence. And of course, overlying that is that it's not a brilliant time for some of these big flow businesses anyway. I guess one risk is that Barclays retreats out of investment banking just as maybe the world begins to look a bit healthier.
Yeah, that's certainly a risk. The new chief executive, Anthony Jenkins, as you say, he's from a retail background. He knows the retail bank best. It's a question of how radical he wants to be. A lot of shareholders have looked across at UBS, whose share price has done very well since it's announced an awful lot of job cuts a couple of weeks ago. And Barclays shareholders are saying, well, we want a bit of that. Why don't we cut back quite radically? But as you say, it could be the wrong time to cut out just when things are at the lowest. Barclays has got some very good businesses, particularly in fixed income and in equities in the States. This is the business it bought from Lehman Brothers in 2008. So there's some good businesses there, and if and when things pick up, they could do very nicely.
And especially since it really is hard to build investment banking businesses. And I guess of any of the new try-hard banks that we've seen in the last 10 years, Barclays has made probably the best go of it of any of them. It's sort of the only overseas bank that I've seen in my lifetime that's had a good crack at the US. It's top 4 in FIC, and it seems to have some momentum. Now, of course, there is the capital problem attached to these businesses, but one suspects with a little bit more the ROEs may begin to look a little healthier.
Yeah, and there's no reason if things pick up it shouldn't look so bad. I think one of the problems at the moment, particularly in the UK, is that the political environment is so anti-bank, so anti-investment bank, and so enthusiastic for banker bashing. You get the new management team in at Barclays, and they're putting out all the very socially friendly messages. We're going, we have a social purpose. We're going to do things the right way in the future. The focus on very much doing the right things and pleasing the politicians, if you like. That you forget that perhaps the shareholders there, they need to see some sort of return, and investment banks can be the right things to provide those in the right conditions.
Well, the Qataris voted with their feet today, but it'll be a hotly anticipated investor day in February. Thanks very much.